Okay, let's go. Hi, everybody. I'm sergiok.kilembe from Trading Wall Street TV. Thanks for joining me on this week US Market Weekly Reports, analysis, perspectives, and probabilities based on my humble opinion. Okay, let's go. The Dow Jones Industrial Average. What do we have? We have an indecision week with a doji, another one, range sideways movements, close above the 4 weeks moving average, and that's maybe a signal, that's maybe an evening star and a bearish signal, as you can see here. So basically next week, if we trade below 18,450, we're going straight back to 18,250 points. So watch out for those levels, and watch out for this pattern here over here. That's maybe a bearish pattern. And if you take a closer look at the average volume, it's decreasing, it's lower than the average. So there's no power, there's no energy to the upside. So precautions. Let's move on. The diamonds, the SPDR Dow Jones Industrial Average ETF. Same scenario, same pattern. Doji in decision week, close above the 4-week moving average. And when looking at the volume, it's decreasing. No power, no energy. So next week it's gonna be tough for the buyers to go higher towards the 190 level, 188. So we're gonna see a sideways movement, markets moving in range, and if we fell off, we're gonna go straight back to 182 and maybe 180. So watch out. Now, Nasdaq Composites. Here at the resistance level, small gains this week at channel's resistance, still above the 4 weeks moving average, close to the 2 billion shares trades on the true average. But as you can see, there's more power, and more weight on the seller's side. So over here you have a gap. So maybe if we fell off, if we reject this resistance, we can come back here at 5,000, and we're gonna coincide with the 8 weeks moving average, and also this past trend line resistance, now a support over here, that region, the 5,000. Next, let's move on. The Nasdaq 100. Same scenario here. Bullish week, close above the 4 weeks moving average at channel's resistance, above the all-time high and historic resistance, close at 4,800. But we see the volume, the true average volume for the 20 weeks moving average volume, we are way lower. We are half the normal size of 1 billion. We are right around the 575 million shares trades. So what we expect for next week, we expect the same kind of movement, a range, a sideways movement until September, and then things gonna start to happen. People are gonna get back to the office, and then we're gonna start to see more volume, more volatility, and more action. No, so until then, trade lighter and keep things in a realistic perspective. Now let's move on to the QQQ, the ETF, the Nasdaq ETF. Same scenario, but here we have something a little bit more interesting happening. We have a bullish trap over here, break above the channel's resistance, a fake out, a fake break, and then a close below that channel's resistance. And then next week, this last week, lower volume, indecision, a type of inside week candle. So now we expect to see a little bit of upper side movement towards the 118, 120 maybe, and then we're gonna see. So let's take a closer look at it. So that's it. You see the movement here, bam bam, sideways movement above the 4 weeks moving average, and then right above the all-time high here. Now it's a support, a past resistance over here. We have that zone over here, and now we're here in this sideways movement. Maybe it can go higher towards the 118.75. Okay, let's move on. The S&P 500s first. The sectors map, weekly sectors map to see the performance. Red here in the financials, red here in healthcare. You see the J&J, Pfizer, the great losers, and CELG. Basic materials, good week for ExxonMobil and CVX, Chevron. Services, Disney, great week. Time Warner, great week. Walmart and Amazon, great week for the drugstore services. Technology, 0% increase in Google. Facebook was down a little bit. Microsoft was down a little bit, 4 basis points. Verizon plus 2 basis points. AT&T, IBM negative 9 basis points. And consumer goods, good week for Apple, Coca-Cola, the Procter & Gamble, Nike, Ford Motor. And in industrials, we can see flat week, negative week for GE, 3M company was positive nearly 1%, and in utilities divided, but mostly up a little bit, like 1% in most cases. So now we're done here. Let's move back to the charts. The S&P 500s. We have here a doji across. That type of dragonfly doji. Over here in all-time high region. Still above the 4 weeks moving averages. We rejected the 8 weeks moving average and then close above, and last week was a doji, another dragonfly doji over here. So we expect a sideways movement for the next week of the next trading week, and maybe we can come a little bit closer to the 2200 zone, maybe 2192, 2195, and that's it. Next, what do we have next? Next we have the SPY, the ETF, SPDR, S&P 500 ETF. Same scenario, Dragonfly Doji, still above the 4 weeks moving averages. 2 weeks earlier we rejected the 8-week moving average. Now it's acting as a support at the all-time high levels, past resistance, excuse me. And now we are still in historical highs. We can see a sideways movements towards the maybe a little bit higher. We're going to push a little bit higher towards the 220. Now let's have a look at the VIX, Volatility Index. Still bearish, below the 4 weeks moving average. 2 weeks earlier we rejected the 8 weeks moving averages. We can see a cross here of the 8-week moving average and the 21-week moving average. We rejected that zone, so maybe the markets are gonna go a little bit higher, you know. If the VIX stay as low as it is right now, around the 10 and 12 mark, we can see the markets going a little bit higher. As far for the S&P 500 reaching the 2200 maybe. So watch out. Now let's have a look at the Russell 2000. This one. Yes, this one. Small cap. And what we can see, a bearish week, but this candle over here, we can see it's a Dragonfly Doji. We are still above the 4 weeks moving average, and we have some type of scenario. As we can see here, we have a gap. So if we trade lower, if we go below this candle over here, and we start trading towards the 1200 points zone of the 8 weeks moving average, we can come here and clear this gap, fill this gap, excuse me, and maybe go back to this pivot point, who's acting as a past resistance. Now it's a support. And we're gonna come bounce over here at 1175 at these channels, trend lines support over here, and maybe we can bounce and then go higher. And in other case, if we trade higher here above the 1240 and 1250, we can directly go towards the 1275. We can see we have a gap over here, was half filled, and then maybe move towards the all-time highs of 1290 and maybe 1300. Now let's have a look at the IWM, the Russell iShares 2000 ETF. Same scenario, you know, Dragonfly Doji over here, still above the 4 weeks moving average. Same scenario, trade below towards the trend line supports over here. We can bounce back towards 122, 123, below, above that level, excuse me, above 123. We can directly go to the 126 level. We can see here we had a gap between 126.70 and 127.40, and then we have the all-time high over here at 128.50. Now let's have a look at the bond markets. Let's begin with the 10-year Treasury notes. the yield. First, the yield. We have a flat week. Here we have that kind of ascendant triangle with a, let's change the color over here. Yeah, in gold it's better. You can see that's resistance over here. You can see the lower highs. That's bullish intent. We rejected like 2 weeks ago, and now we are flat, still over here at these supports. And maybe if we go and trade lower, if the yield goes down, we're gonna go back straight to the 1.35%. And if we go higher, over here we have that resistance over here at the 21 weeks moving average at 1.65% yield. Now let's have a look at the tradable CFD. With this one, the US 10-year Treasury Notes Cfd, and it's the complete opposite in an uptrend channel. Here we can do this like that, boom, change the color over here in green. Yes, like that. And we have this triangle over here, and as you can see, it's a wedge, and now we have to choose a direction. The market has to show us a direction. If we go lower and we break below this supports right below the 130 mark, we're gonna go here at this past resistance 1, 2, and 3 multiple top over here to make that. Now it's resistance over here at 131. And if we trade higher, because we are here in this range and in a month of weekly inside candles, and if we trade higher over here, right above the 133 mark, we're gonna go towards the 134 and maybe 134.25. Okay, let me save this. Now let's have a look at the US Treasury bond, the 30-year yield. Same scenario, flat week. We have like a kind of a small bullish flag over here, as you can clearly see. So we are trading higher. We're trying to break above. We break above the 4 weeks and the 8 weeks moving averages, and then last week, 2 weeks earlier, we reverse this candle over here, paralyzed and then rejected that bullish sentiment. Close below, inside week candle, sideways movement, flat week, below the 8 weeks moving averages and the 4 weeks moving averages, and now the yield is at 2.2%. And maybe we're gonna trade lower. We're gonna go back towards a 2% yield, or if we go higher, we're gonna go back towards the 21 weeks moving averages at 2.5% yield, and we have a gap to fill over here. So it's gonna be very interesting. So that's a level that we have to pay close attention to. Now let's have a look at the tradable CFD. Where's that? Here. And we have the complete opposites, a bearish week and now a bullish week, still in an inside week candle in these great bearish candle. So we're moving like we're moving for a month. We are moving sideways, and now we are expecting a move higher, so we can break that trend line over here and trade above the 174.75 level, because we are right now we are at the 8 weeks and 4 weeks moving averages. There's a convergence between those two moving averages. So if there's a cross, if the 8-week moving averages passed above the 4 weeks moving averages and there's a cross, then we're gonna trade lower. So here we have this support over here. So if we break below, we're gonna go towards the 170 points and then 168 points, and this coincides with this past multiple top over here, and now it's a support. So we can come here, bounce here, and then boom, go back higher. So pay close attention to this particular level. Now we're going to focus on the DXY, the US dollar index, on the weekly chart. We are in this uptrend channel here. It's a bullish channel. What do we have? We have a bearish week. We are in a inside week candle for the third consecutive week. Close below the 4 weeks and 8 weeks moving averages and cross below a convergence of these two moving averages, and now we see the price trying to reach the 21 moving averages at the channel, at the bullish channel's support. We have a rejection, so maybe now we're gonna trade higher and go back towards this level over here of the 97.50, and if we break above, then we're going to move higher towards the 98 here, 98, and then that range over here. We have that range. So we're going to see what the US dollar is going to do next week. Now let's move on and let's have a look at commodities. First of all, we're going to start with oil. The crude oil is CL. Here it is, crude oil. So over here, what we had last week, we had a this head and shoulders pattern. We're gonna draw it over here. So we have like the left shoulder over here, then the head over here, and then the right shoulder, boom, like that. You see? So let me just play a little bit with the opacity so we can see the price action. That's it. And let's zoom in a little bit. Bam. Okay, now we're good. So you can see that over here we had a, no, it's too dark. I'm gonna make it a little bit lighter. Okay, perfect. So we can see here a rejection. Now we're starting to move higher, a break above, up, excuse me. Okay, now we're good. Here, rejection of the lower prices below the 52 weeks moving averages, and then now we have a good morning pattern, you know, that's a bullish pattern. So now we are going back to the $50 a barrel level over here. That's a very, very important resistance level. And then we expect oil to trade above $45 a barrel. That's going to be above the 8 weeks and 21 weeks moving averages. And then, as you can see, we have here a convergence of those two moving averages. So if we make it And if we go above, first of all, we're gonna go here to the 48 level and then the 50 level. And the big picture, once again, it's a left shoulder. You can take this one or this one, but I take this overall region over here, this area, for me as the left shoulder, and then here the head, and then now we are forming the right shoulder. As you can see, it's a pattern. It's a pattern it's a bullish pattern of A, B, C, D. Now A, B, C, and maybe another D. So we can also draw another bullish channel over here like that. That's okay, like that, and this like that. Okay, so now you can clearly see, and once again, let's have a look at the big picture. That's it. That's the big picture, you know, for oil, for the crude oil. Maybe a little bit. Now you can see. So you see over here, bam, bam, and then the 50 mark, and then going back to the $60 a barrel. That's it for crude oil. Now let's take a look at the Brent oil, LCO. And that's the same scenario, the same pattern, you know, left shoulder, this one or this one, but all this area for me is the left shoulder, but this one, that's the head, and now we're forming the right shoulder, you know. So same scenario, we are moving higher over here. We are bouncing here. You can see the good morning pattern, you know, as we can see here, bam, 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 here, boom. We rejected the 42 dollars a barrel. Now that's a pivot point, and now we are moving higher. Inside week type of candle, and then next week follow up of these bullish sentiments. Now a close above the 4 weeks moving averages, 21 moving averages, and the 8-week moving averages. We're trying to go back and break above the 47, 48, 47, or maybe no, it's better 48, and above 48, 50, and then to break here above 50, above $50 and $53 a barrel, and then we can start to trade higher and go back towards first we have a resistance here at 62.50, and then 66.68. So that's it for oil. Now the precious metals. First of all, gold. Okay, commodity, gold, and gold indecision week type of doji with a long shadow, a long tail. We're trying to break above this trend line here. Rejected it. That's a bullish trap, and that's a pattern, you know. That's a bearish pattern. So we can see if we go in that trend, we can go lower, start to trade below 1350 and 15, sorry, and come back here towards that past resistance, now supports around the $1,285 an ounce, and then bounce from there, because that's a trend line, a bullish trend line, and that's the supports region. So we're gonna save that, or maybe move sideways. And now silver. Okay, commodity, silver, pretty much the same scenario. we have here a pattern, long tail. That's a bearish pattern, a bearish configuration. So if we trade below 1950, we're gonna go back here at the trend line supports right around the 1718 level of support, and that's a past resistance over here. And we can also see a convergence between the 4 weeks moving averages, 4-week moving average, and the 8 weeks moving average. And if the 8-week moving average crosses above the 4 weeks moving average, that's a bearish signal. So maybe there's a great probability to see silver trading lower. So remember that. But we are still in this bullish pattern, but we have reached that this particular area. That's a resistance area. We see here long tails. We rejected the $21 level, and that's a past resistance, an important one. So 1 time, 2 times, and also it was a support level. So that zone over here, that area of prices between 19 and 21, it's a very, 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 very important zone, and with a lot of conflict, you know. So pay attention when you are trading silver. So now that's it for the commodities, and now let's have a look at the Bitcoin, BTC versus the US dollar. And over here we can see the wedge. We break below this wedge. Over here we are forming a type of bearish channel. If we do like that, we can see that's clearly a bearish channel. So now we had a bearish week, close right above the 21 moving averages, 21 weeks moving average, right around the 550, and the tail over here, it's a signal for the prices to go much lower. So what we can see, we can expect, if we trade below, we can expect to see that kind of movement. We can go much lower and bounce here, bounce on the 52 weeks moving averages, and to complete this cup and handle pattern, we can see here a great parable, same one as here. So that's a mirror, you know. If you take if you split your graph in two, so this part is going to be equal to this part. So that's the same scenario we're seeing. So now that's the cup and now the handle. And if you fail to bounce over here, we're going to go much lower and bounce over there, and then boom, start building a bullish configuration to go back towards the 700s, 600 first, and then 700s. So I'm going to save this Bitcoin versus US dollar chart. And now to end with, as usual, we're going to end with the economic calendar for week starting at August the 15th through Friday, August 19. Okay, on Monday, what do we have for the United States? We have some data release, but none of great importance, you know. On Tuesday, what do we have in the United States? At 2:30 p.m. we have U.S. core inflation rates year on year from July. Next, we have inflation rates year on year from July. On Wednesday, what do we have on Wednesday for the US? At 8 p.m. we have FOMC minutes And then for Thursday, what do we have on Thursday? Some data release, but none of great impact. And on Friday, last trading day, we have nothing for the US. So thank you very much. Thank you very much. Have a great trading week and see you next week. Bye bye. Thanks.